Assalamu Alaikum everyone, welcome back to the channel. In today's video we are going to analyze Crowdstrike and this business model. But before I start looking at the company, I just wanted to give you an overview of my two portfolios, the dividend portfolio and growth portfolio. The dividend portfolio is up about 6.5 at the moment. About a month ago I think it was down almost 2%, and the total gains for this is about £1,360. Funny enough, this one is also up £1,350, so not much of a difference. But a lot of these gains in the growth portfolio comes from Tesla, which is up about 83% and so. Okay, so this is my overall portfolio at the moment. We're not going to look at this at the moment, but I've created a couple of videos. I've shared with you a couple of videos before. So if you want to know exactly what's inside those two portfolios, please have a look at the some of my previous videos. So at the end of the video, what I'm going to share with you basically, so this week basically we started the earnings reports. So a lot of the companies are reporting their earnings. So I'm gonna basically share with you my opinion of what I think you should do maybe next week and going forward, and when some of the companies that you own are reporting their earnings and what normally tends to happen. So stay tuned till the end. I'm gonna share that with you, inshallah. So the company that we're looking at today is Crowdstrike. Crowdstrike basically is a cybersecurity company. They stop breaches, and basically that's what they do. They basically, their customers include some of the biggest companies in the world, and their main purpose is to stop other companies hacking basically, or doing some sort of dodgy things into their basically systems. Okay, so at the moment when it comes to the cloud platforms, you've got Salesforce. Okay, so one of the biggest cloud companies around. You've got ServiceNow, you've got Workday, and Crowdstrike basically what they're saying is they position themselves as part of this group of companies. Now, some of them have been around for a while. Crowdstrike, as you can see, has only been around since 2011, but they are getting there when it comes to their popularity, if you like. So some of the things that we're going to talk about now is basically just to kind of give you how the company is doing at the moment. Okay, so like I said, it's a cybersecurity company. They have a lot of customers that are some of the biggest companies around, and currently as we speak, their annual recurring revenue is $1 billion. Okay, and that is up 75% year on year on growth. When it comes to subscription revenue is about 92%, and that's up 77%. Now, by looking at these numbers, so the fact that the annual revenue, recurring revenue is up by 77%, then you've got the subscription that's up. You've also got the number of customers. So subscription customers is almost 10,000, which is up about 63%. This shows you this company is growing very, very fast, and I'll share with you some of the companies they actually work with in a bit. Okay, so have a look at this. When it comes to growth, the growth of this company and some of their basically customer base. So at the moment, as you can see, from 2017 to 2021, you can see the growth of this company. At the moment, they have almost got about 10,000 customers. Some which are 58 or basically of these companies are in the Fortune 100 companies. 177 of them will be in the 500, basically Fortune 500 companies, and then 12 of the top banks in the world are using this company to protect their data. Because they're also the cloud native company, okay, that means they can protect any company from anywhere around the world. It doesn't matter. They just need access to their data, and they will be able to protect those companies from anywhere without having to install anything physically. This is one of the things I love about this company. When it comes to total addressable market, which is basically their market share, if you like. So how much of this platform, in this market, they actually share with other companies. Okay, so there are other companies that are also basically doing similar sort of thing. But when you look at this company and how much they've grown, basically their total addressable market by 2023, you're looking at about $43.6 billion from where it is currently. Okay, in 2021 to basically where it's going to be. So the compounding annual growth rate of 9% in the next 2 years. And when you look at around basically some of the companies they involved, they are absolutely huge. Like we said before, you know, the Fortune 5 to 100 company, 58 of those companies basically actually use CrowdStrike. So when you look in companies that are growing, this is what you want to see, because it's really hard to actually, you know, put valuation into one of these some of these companies because they're not actually making profit. But you want to see the potential, like what are they doing at the moment, where are they and where are they heading. And when you see something like this and you see their basically total addressable market by 2023 is going to be, you know, $43.6 billion, that's really great. And this is one of those companies I think will definitely be around and potentially be profitable very, very soon. And this is the reason why I'm basically, one of the reasons basically I love this company and this sort of basically this side of things when it comes to the IT side of things, when it comes to the cloud side of things. Now, if you look at it here, okay, what you will notice is by this year, so the last year, 2020, we've spent about $106 billion. A lot of the companies, okay, have spent $106 billion when it comes to protecting their data and so on, right? And so basically creating a new software as a service, and then platforms as a service, okay? And this year, and this is basically according to the International Data Corporation, by 2023, they're predicting this is going to double. So a lot of companies that are creating software as a service, platforms as a service, are going to double. Okay, so there will be more services, more software as a services companies, okay, and innovations in the next basically 2 to 3 years, and that's going to double. But what is interesting is this is doubling, but when you look at how much companies are spending currently, it's inefficient basically. So what this company is saying is a lot of companies are coming up with all sorts of brand new software. Okay, but they haven't actually thought about how they're going to protect that data. And the CrowdStrike, what they're going to do is tap into that market and make sure they are the company that's going to protect when this happens. So the growth of the whole basically sector is going to multiply basically next couple of years, going to double next year. And what we basically CrowdStrike is trying to do is basically tap into that sort of those customers. Okay. And according to the IDC, if you look at it, it says an organization should spend between 5% and 10% of its IT budget on security. Okay, because obviously you can't, basically you've got a cloud company and you obviously have to protect your data, because otherwise your customers will not be happy. And okay, so that's one of the reasons basically CrowdStrike is in a really great basically place at the moment to tap into that market. Okay, the other thing is the net new recurring revenues. So when you look at the ARR, the new, and when you look at the starting ARR, you can see the difference, and you can see basically by the time we get to the fiscal year of basically the end of this year 2021, we're basically expecting about $1 billion for this company. When you look at the strong revenue growth, currently annual revenues, and then fourth quarter, so this is basically annual and this is the quarterly. So when you look at this, you can see from 2019 to 2020 how much is actually grown. But when you compare 2020 and 2021, it's absolutely huge. And then you can see per quarter, this company is growing. So this is what you want to see, that strong revenue growth from a growing company. Obviously, some of the money, some of the profit margin, some of the profits they make will go back to the company, because obviously they're still very young and they want to expand the company. And that's absolutely fine. But the most important thing is the company is actually generating a revenue. Okay, that's a positive that could potentially be a free cash flow that they can reinvest in the company. Okay, and that's something you need to look for when you're actually looking at this type of companies. Okay, another great thing to see, this is the percentage subscription customers with a multiple cloud modules. So what they do is basically they have loads of different modules. So some companies will opt for 2, 3, 4, depending on basically what they need. And that is growing at the moment. So the 4 or more, okay, has grown basically from 30% to 63% in 4 years, which is really great to see. 5 or more is about 47% at the moment, and 6 or more is about 24%. So not only are they selling basically their products to their customers, they actually get in some of those customers to obviously stay with them and buy more of these modules because they need that protection for their data. Okay, so the next thing we're going to look at the long-term target of operating model. And when you look at this part, for example, the sales and marketing side of things, so they're spending basically about 30 to 35% on that one at the moment. When it comes to research and development, they're spending about 15 to 20%, and you'd expect those basically when it comes to the sales and marketing to drop basically a little bit lower, as once the company start becoming a household company. When it comes to the research and development, they normally increase it because this type of company, they always need to to stay one step ahead of the game, for example, right? So they obviously need to basically spend a lot of money on the research and development. And finally, the last thing is the G&A, which is general and administrative. That's basically just the normal general admin stuff that they're spending money on at the moment. And their operating margin is about 20% plus, which is really good to see. So as you can see, this is a very healthy company. Even though they're very new, they have got a lot of really very good customers. They've their balance sheet looks really good, and I can see this company in the next maybe 4 or 5 years actually creating a really very good cash flow and be a profitable company. Okay, so the final thing we're going to look at is the valuation. And at the moment, the company is actually undervalued by almost about 4%. So fair value should be about 210. At the moment, it's trading about $202 per share. So if I were you and I was interested in this company, maybe right now is a good time to maybe just buy a couple of shares or fractional shares or whatever you're capable of. Okay, if that's something that the company you're interested and you were looking into it, hopefully this was a bit helpful. Have a look at the company, a little bit more detailed. Have a look at their balance sheet, understand the business model, because the business model for me is kind of easy to get my head around, but for someone who hasn't probably got the IT side of things or computer science side of things, it might be a bit more challenging. So have a look at that, and if you're really interested, right now is probably best time to maybe start a position and hold it. By the way, when you get into the growth side of it, okay, and I think I've mentioned this before, one thing you really need to do is have a time. So for example, if you're buying a couple of shares of this company, you're going to hold to those basically shares for a very long time. Okay, so it's not something that you can quickly make quick money and leave, whatever. Sometimes this company will actually go down, and I'll show you in a second. I'm actually in the red, even though I only have 2 shares. I'm in the red, but I'm not in a hurry. I'm gonna keep adding to it, and I'm gonna hold on to it probably until 2025, unless something crazy happens to the company. So the final thing I want to show you is what other basically the analysts are saying at the moment. And when you look at the revenue estimates, you can see basically next year, so 2022, they expecting $1.34 billion of revenue growth, or basically revenue estimates. The year after 1.7, and that is basically up from currently where we are. Okay, so from basically what last year's sales, that's about 53% up, and from this year 2022 to the 2023 will be up about 31%. Okay, and it's really good to see that basically the company are actually growing their revenue. The final thing we're going to look at is the current year, so about 11% growth, next year 100% growth, and then the following 5 years about 25%. Okay, so that's basically the growth estimate for this company. One final thing, currently it's a buy, as you can see is 1.8, so is currently the analysts are saying is actually a buy. The average target is 255, is currently trading at 202. Okay, that's all I have to say about this company. So before we move on, let me just quickly show you. So next week, basically a lot of companies are reporting their earnings. Okay, some of these companies that are in your portfolio will possibly be reporting, and you might see a dip in some of the stocks that you own or you might actually see basically going up very quickly. So it could be, it could go either way. But what I normally tend to do is I try to have a little bit of cash around. So Pepsi is reporting, and the basically TSM is also reporting next week, and these two companies are in my portfolio. So what I tend to do is I wait until that day. I think they're reporting on Thursday, so I'm gonna check there on that day, and if I see a dip, then I'll definitely be buying a couple of more shares for each company, because I haven't reached my limit for those two companies. And that's basically what I normally try to do, because it's really important to kind of keep an eye on, especially if you are a stock picker. You know what I mean? It's, if you've got ETFs, you don't have to worry about it. But when something like this happens, this gives you an opportunity maybe to buy more, or if basically it shoots up, then you just leave it. So there will be other opportunities. It will come back down. Or if you don't want to dollar average it, maybe a day before, if you want to buy a little bit, and if you see a dip, go for it. Okay, so that's basically what I normally try to do. There's a lot of websites that you can actually go to find out basically the earnings report for next week. Right now the one I'm using is Market Insider, so they have a lot of information about what's going to happen, and they give you a little bit of analysis, what to expect and so on. So it kind of keeps you, exactly basically what's going on with some of the shares that you own. I hope you enjoyed the video. If you have enjoyed the video and you find some sort of value in this video, please like, subscribe, share with your family and friends and everybody around you. Take care, everybody. Assalamu Alaikum. I will see you soon.